Hi everyone, it's Stuart here today. It's Tuesday. It's the 7th of October. Obviously, a hideous two-year anniversary since Hamas's attack on those kibbutzes in Israel. Terrible, terrible day. However, let's move on. We've got we got the euro under pressure. We got gold at all-time highs. We've got Bitcoin at all-time highs. We've got stock markets at all-time highs. It all can't last forever. And if you're a scalper, which is what we're going to look at today, you don't care what's happening really. You're in and out in a matter of seconds. Sometimes a tick here, a tick there, and you're making money or you're losing money. Long-term traders, the trends remain to the upside on all those key assets. Obviously, can't go on forever. However, the beauty of trend following trading and the higher time frames is, trends can run and run and run, and that's what's happening at the moment. As I say, it won't go on forever. We got the US government shut down. We got chaos in French politics weighing on the euro. We've got this new Iron Lady in Japan about to become prime minister, and looks like the Japanese version of Margaret Thatcher, they're calling her. And so the yen's collapsed. Stock markets have rallied in particularly the Nikkei. JGBs, the bonds in Japan have moved. So very, very actual volatile, relatively volatile week for Monday, Tuesday, without little data because of principally because of the US shutdown, but there wasn't much data anyway. So anyway, today we're going to run through some scalping strategies. As I say, do join me. If you've got any comments or questions, please let me know. There's a lot in here, so I might not get through all 6 of them in the next hour. We'll do a second part if we need to, because as with all types of trading, success in trading is down to you as the trader. It's not the strategies we're going to run through today. It's really about you understanding yourself. For instance, obviously, lots of people get attracted to scalping. There's some significant benefits, some significant drawbacks, but if it doesn't fit your personality and your psychology, it's not going to work for you. Simple as that. And so, find something that works for you. I went to get my haircut this morning, and I'm staying with my father at the moment, and back in my old village that I grew up in on the coast in the northeast of England. And the guy that cut my hair, he was a bit, he's not rude, but he was just made the comment, because he said, "Are you a multimillionaire then if you teach people to trade?" I said, "Well, I'm comfortably off. Yes, I am, but that isn't the point. The point is, I'm comfortable in my own skin doing what I'm doing, and I love teaching people. I love that light bulb moment people get." And there was a guy on our Discord feed this morning, Jerry, who said some. I don't know if he's here, Jerry. I don't know if you're here. If you are, speak to me. Stick a comment in the chat box. If not, I understand your reluctance. He said, what did he say? He said something about something was working for you. He wanted to sort of copy what I was doing on the end of day trades that I put up on the Discord group, and he said, what was the word? Um, mm, 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 Sorry, I forgot what he's wrote here. I've lost what he's wrote, but it's it was when he said yes. Some of his things were working and some of the others weren't. So, and I was saying, he said, "Yes, I've been trained for a while now. Some strategies are working well for me." So I basically said, "Well, if that's the case, stick to the ones that are working, stop the approaches that are not working." He said, "Yes, absolutely right. Trading is mostly a mind game, which is what I focus on all the time." I'll just show you the interaction we had earlier. And he's right. And then, she's right, Adam. So I'm assuming he's a guy, Jerry the Mouse here. "You're absolutely right. Trading is mostly a mind game. I keep focusing on what's working for me and staying consistent." And that's absolutely correct. As I say, whatever time frame, whatever strategy you're approaching, whether it's seconds with scalping or long-term swing traders or long-term end of day trading, and really that's the key thing, whatever type of trading we're going to go on. Okay, so I'm going to try and keep this to an hour today because I know people don't sit around and can't concentrate and listen to stuff for old guys blethering on for hours and hours in the days of Snapchat and TikTok. But honestly, guys, these strategies all work. They all work well enough. They're not my unique strategies. The ones I've adapted from people I know, traders I know, things I have set up. One is a particular one, a particular favorite of mine. But um, we'll see what that goes. How do I have the ability, or what gives me the confidence or the credibility to actually talk to you about this? I'm an old guy. I'm in my 60s. I've been around a long time. I've seen lots of booms and busts, but I've been investing and trading for many years. And like Darren said this morning in the hairdressers, sort of, why are you still doing this? It's because I enjoy doing it. It keeps me active, keeps me busy. I love the mental challenge of trading, mental challenge of trading, beating myself or successful in beating myself, because that's what I got wrong, very, very much so, when I first started many years ago. I had to be a winner. I had to be right all the time. That's a horrible quirk of my personality. I'm one of those like told you so sort of characters, I used to be. I'm still a bit like that. Just ask my wife. But once I got over that and accepted that losing was part and parcel of the trading business, it was like a light bulb moment, and things moved forward very successfully very quickly after that. But it took a while to get that right. So I've worked for in the City of London for many years. I worked for brokers in Cyprus. I'm now back working remotely for the proptrade.com with a former colleague of mine. And she's doing a great job in running this business. So I'm happy to work with my colleagues. And my approach to trading has always been the same thing: in investing, probability, simplicity, and time frame. So find what works for you. Most of my investments are done in a long-term basis. That my trading investments are done on an end-of-day basis. But I do like the odd scalping. I do like trading the open of the DAX in particular. The DAX and the Dow are my two favorite indexes to scalp. And trend following is my mantra, though, really, and most of my systems are trend following. But we'll have a look at lots of different systems today. So we're going to focus on scalping. So it's a mindset business. So are you personally designed to be a scalper? What is scalping? I've got 5 ideas for getting going. If you've not done it before, you've got to keep this approach and keep it perhaps separate. Some strategies work on lots of different timeframes. Most of my strategies work effectively on lots of different strategies. Some are better than others. But the most important thing is the one that works for you. People say short term because I don't want to hold for very long. But obviously, when you're scalping and doing short term trades, you're not making very many pips, or you get out quite quick, or you can get out quite quickly or too early if there's a big trend starting. Because obviously, in the low time frames, that will start before you see in the higher time frames. So, and then there's a risk of overtrading is quite significant. Look at those 6 big. Flip side of that is obviously the risks to scalping. So 6 risks. What attributes make a good scalper? What makes the physiology, the personality of a person appropriate for scalping? Whether you're wherever you are in the world, remember this, guys. It's not anything to do with race, religion, belief patterns. It's all about you, and to anybody can be successful at any type of trading. Scalping is just a technique within the whole trading toolbox. 6 approaches. I probably won't get through all of those today because it's already 1:15 the hour. I'm going to wrap it up around about top of the hour, so we'll see what we can get through. Any questions, please let me know. Stick it in the box, and I'll answer them. Any other ideas? If you want copies of these slides, I can give you ideas, because again, nothing of this is exclusive. So are you designed to be a scalper? Are you a permanent bear? Are you a permanent bull? If you're sort of biased to one way, which we are as human beings, you will find it quite difficult to flip. And that's the key thing of scalping. You can't get emotionally attached to a position. If you win, you win. If you lose, you lose. You've got to try and keep that mindset at the front of your mind at all times. So if the market is going up, you will be bullish. If the market's going down, you'll be bearish. But suddenly it can flip, especially in these short time frames. So how are you created as a human being? Can you jump off the diving board into the trading ocean? Are you a lone swimmer plotting your own course? Are you the individual jellyfish just sort of floating around, or appears to be floating around with no direction in the currents, with a sting in his tail or a sting in her tail. So we'll see. Andrew Aziz, Iranian guy based in Canada, very, very successful, very motivational. He's a mountain climber now. Bear Bull Traders is his company. Go and check him out. Andrew's a really nice, honest, straightforward guy. Wrote two or three really good day trading books. And his quote here from when Twitter was much nicer. Success in day trading is all about finding the right balance between risk and reward. And that's the case for any type of trading, but it's even more so for you as scalpers. So scalping is basically a short-term approach to trading, in and out very quickly. Obviously, you want to make lots of small, frequent trades. We're in and out, maximum of 5 minutes typically. So what I would call, and anything over 5 minutes isn't scalping in my book. But the issue with scalping is most newbies and even experienced traders think that because it's fast, it means it's profitable and easy. I don't know how that marketing by the brokers and other institutions has come across, but just because it's fast doesn't mean it's profitable or it's easy. It seems to have this idea that there's no risk involved in scalping. You can get things back. You can apply martingale strategies and get things back quite quickly. I'm a big anti-martingale trader myself. I've never seen it prove successful. I've got one former colleague who's quite a fan, and he's made a success of it with his particular setup. But anybody else I know has always blown things with martingale. It's fast. A lot of attention can be required. You've got to concentrate quite a lot. It does take you, if you're doing it, even if you've got an automated system, you've got an EA that's running it, an automated robot or a pilot, or you've got or we've got the vagrancies of OpenAI and ChatGPT and the beauties that is artificial intelligence now. You still need to apply. It's you that's making the money or losing the money. So the best time to trade really is the tightest spreads, the tightest liquidity, especially if you're trading forex. You can scalp any asset. Forex has the tightest and the deepest liquidity and tightest spreads obviously when London's open, because that still remains, regardless of what other people might tell you, still remains the center for the forex business. And the New York. So when New York's open, which is now, basically New York is open now, as I speak, now is a good time to be scalping. It's the deepest liquidity. It's after lunch in the UK. It tends to be a bit better in the morning and the afternoon. But anyway, New York is open. And has been for an hour or so. The stock markets will be opening in 15 minutes in New York. Chicago futures markets will be opening. And then it all quietens down right about 5 o'clock my time here in London. The London and Frankfurt stock markets close at 4:30 London time. Still a bit of more trading going on, but the liquidity dies off quite significantly. It's stressful. It can be. You need discipline, patience, and personality is key. You also need a good connection to your broker or your platform. So, reliable internet connection can be good. Make sure you've got a dedicated link if you can. If you're going to trade Forex, as I said, trade in the London session, in the New York session, focus on the majors. That's where the tightest spreads are: euro, dollar, pound. Guppy I like to trade, but the spread can be a bit wider on the pound yen. Pick 2 or 3 pairs or 2 or 3 assets, a forex pair, gold, a particular stock or a particular index. Don't have too many things open on your screen, but find the thing that really gets you. As I said, I love scalping the DAX and the Dow as well. The Nasdaq as well is quite volatile, has become quite volatile, and Nasdaq 100 is a good one as well. So you want high liquidity, tight ranges, and just be careful of correlated trades. So if you're long euro, dollar, and short dollar yen, that you're expecting a weakness in dollar in both those trades. So if that doesn't, you can get caught out. So don't have too many correlated trades all open at the same time. Obviously, you can have negatively correlated trades, but one's typically would win and one would lose. That's some of the principles of hedging. But we're not going to talk about it today. We're just talking about short-term scalping strategies. So what's going on when you open up your strategy? Is the market, where was the market high, where was the market low yesterday or the last session? Mark those on. Is there any major news coming out? Obviously, that's going to move things, especially as a scalping. You get completely caught out with something that President Trump, for instance, he's can be very market moving, can't he, with his Truth Social posts now. Used to be on Twitter, but Musk, that bro romance has come to an end. So is the market generally trending? What's the 1 hour time frame doing? What's the 4 hour time frame? What the 15-minute? Are we trending? Are we ranging? If you're going to use oscillators and indicators, use the appropriate ones for the type of market, whether we're trending or whether we're oscillating. So 5 ideas, and again, these aren't unique to me. You just find these everywhere, but it's about you. Whatever I'm going to say today, it's all about you. So focus on one market, whether it's FX, can be just one pair. We're going to look at I'll pick the euro simply because it's the tightest spread and the biggest liquidity, but it doesn't move around very much, euro dollar, to be honest. It's not a great one for moving. A way of some people get attracted to things like the pound yen or the pound Aussie, simply because they move further purely basis, they have a bigger ATM. The risk with that is obviously that from a scalping point of view, the spread is wider and there's less participants, there's less liquidity, so it can, the spread can move quite significantly and take you out, or going a bit temperamental. But and then especially if you go to something like some of the less liquid pairs, like the Swiss yen, or you'd want to trade the South African rand or the Turkish lira, the exotic pairs. The spreads there can be quite significant, and there's less participants, so the market moves in a less structured way. What tends to happen with scalping is, the higher, deeper liquidity position assets, whether it's gold, whether it's dollar, yen, they tend to fit the patterns of technical analysis a bit better as well. That's the other thing. Trade in one direction. This isn't an absolute rule, but if the market, if the hourly chart's going up, the 4 hourly chart's going up, and the 15 hourly chart's going up, 15-minute charts going up, you'd want to be, on your 5-minute trades or your 1-minute trade, it seems to make sense to be just taking the long trades, and vice versa, it's going down. If there's no direction, that's the beauty of mean reverting strategies, which is what we're going to look at a bit today in scalping as well. Don't be on the screen too long. Don't try and do these short terms, these multiple trades very, very for any extended length of time. And as with any type of strategy, trading strategy, always control your emotions. So fear and greed, hope, regret, get rid of hope in any type of trading strategy. You don't open a position and hope it's going to win. It either wins or it doesn't. Keep the losing trades small. Fear and greed, the two key emotions, and always manage your risk. So when you're going to lose, have a stop loss. It's becoming quite difficult with when you're trading quickly with scalping, but have even if you don't physically put the stop loss on, have an idea where you're going to get out and get out. Don't try and move it. That's some of the fatal people that blow their accounts. Don't accept losing and keep moving the stop loss down away as the market's moving down with it, or keep the stop loss moving up as the market's moving up, and don't accept that they were wrong. They made a wrong decision. They're lost. Accept it. Get on. If you can accept a 1 or 2% losing trade, you stay in business much longer, because suddenly a 1 or 2% losing trade, if you keep moving the stop loss, or you haven't got a stop loss, you can't accept to close it, it's suddenly 5% or 8%, 10%, 12%. Before you know it's 20%, and bingo. It's very, very difficult to get back from those sort of positions. So don't hang on to trades. Right, benefits and drawbacks of scalping. Some of 3 or 4 key things about attracts people to scalping. Because you're only trying to predict 5 pips or 10 pips or 10 pips, you get it by high hit rate. So those type of traders, those type of people that like to be winners, like to say I'm a winner because I'm winning 80% of my trades, or 75% of my trades, or 90% of my trades, you can do that with scalping much more easily, much more quickly than with any other higher time frame trades. So you can get quite a good hit rate. It's easy to predict the shorter move, isn't it? The main one for me is the next two. The fact that you get no overnight risk. You close the position at the end of the day. You're trading for an hour. That's it. I've made my loss, I've made my profit, and that's it. I've closed my book. I'll come back tomorrow. Tomorrow's another day. I've banked my profit. I've banked my loss. Move on. No overnight risk. You're not lying in bed thinking, oh, what if? Oh, I wonder what's happening, and all that sort of stuff. So there's nothing to worry about when you're lying in bed, or even when you're away from your screens. I know a lot of people say that scalpers will close their position now, go out for a walk, or go and get the kids from school, or whatever they need to do for the rest of the day, or go to work, or go to university, and then worrying about the trades that are open. With scalping, you haven't got that. The other big thing for leverage positions and leverage accounts is much less margin, because your stops and your targets are much closer with scalping, because you're only looking for 5 pips, 10 pips, 20 pips. You're not using up a lot of um, margin having big stops. Some of the massive stops I have initially on my end of day trades, even now after all these years, so I still go it's a bit, but that's what my system's saying where the stop loss needs to be. The pound, for instance, the cable trade we had open, we came really close on Thursday and Friday getting stopped out. It didn't, and then yesterday it did get stopped out, so there was 40 pips lost there, but it hasn't gone anywhere. But it was a losing trade. Um, so you can keep your stops and your targets much closer, therefore using much less margin. And if you're a new trader, the other big benefit of scalping is you get a lot of experience on real markets, on live markets with live cash, your account, quickly. So you can get 100 trades under your belt very quickly as scalping. Not it could take weeks or months sometimes if you're trading on the 4-hour time frame or the end of day time frame. you know and again, you can test yourself. So with scalping, it's easy to adapt. You don't get stuck in the position. You can add to your position as a move is moving up, but you can you need to be able to switch from one to the other. So if you're good at adapting things, that's quite a big benefit of scalping. If you've got a strong trend going on, it's very difficult sometimes to change your mind about this trend, getting out of the trend. And again, even with scalping, you can have long winning streaks, so you can repeat that. Add to your position from hour to hour as the trend continues to unfold in one particular direction. So you still can get lots of trades, both long and short, or just long if that's what you want to do, very quickly, and you can have a long position. So instead of holding one relatively big trade, which might be losing up a lot of margin and a lot of your equity, yeah, and hanging on to it, you can get in and out quickly, banking the profit, definitely banking the profit into your account, and then adding again as the trend continues. So they're some of the key benefits that attract people to scalping. Certainly the high hit rate and no risk and low margins, two of the big ones. The flip side of that is obviously the risk. So as you're only dealing with a few pips for your target, you do need a system that's quite accurate. So if you've got a system that doesn't get you a high hit rate, you're going to run out of cash quite quickly. It can be very exhausting because you're concentrating, and you do need high concentration levels. It can be very tiring. The big cost that lots of people sort of miss is the cost per trade, because the spread is the spread. That's the cost. That's the principal cost of your trade. If the spread is 1.2 pips, if you're looking to try and make 5 pips, for instance, I'm just using it as an example, or 10 pips, that's your cost. The cost is 1.2. The cost is still 1.2 on the spread, i.e., how far the price needs to move up before you're in profit, if you're looking for 100 pips. So the cost per trade is much higher. The targets are closer. The other keys of the day can really catch you out. So if you're not aware of the big news and items, or you haven't got a good news feed, the sudden noise of a tweet from Trump, or a piece of news that doesn't come in close to market expectation, can really move things. Or if there's there's big news coming out, and the players that you don't know, the big banks, the big fund managers, they may be wanting to go contrary to the trend or something. They may have a big order to be filled or to be executed, so they can use the noise of a big news announcement to start dropping in lots of volume, and it can cause, you'd be taken out quite quickly. The time for money exchange. This is how much time you're spending staring at your screen to make a few pips. It can be quite high as well. So the time for money exchange is a lot of for the amount of pips you're making. At the end of day, for instance, I scan nearly 50 assets, and it will tell me, if there's a trade coming up or not, and that can take 15 minutes basically. And yes, the target can be massive and the stop loss can be massive, but it's a set and forget strategy, and that's it. It takes 15, 20 minutes. 15 or 20 minutes in a scalping environment, you could have made 5 or 6 pips, 10 pips. You could have lost 20 pips. There's a lot of screen time for the amount of pips you might be making. And the other thing about, because of the time frame, because of the shortness of everything is exaggerated, everything is compressed. So your emotions, your fear, the greed, the hope, regret we talked about before, all of that is sort of focused and pressed down, so that the shortness of the time of the trading can exaggerate your fear and greed and your panic and your heart rate and your sweaty palms and all the rest. Alone in your dealing room or on your phone or wherever you are. So any type of trading, there's pros and cons to either. There are some significant benefits for scalping, but obviously some significant risks as well. So make sure, when you're coming into your trading time frame, you know what the big news of the day is, when the deep liquidity is. This is a example of the liquidity. The London, New York sessions are times you really want to be scalping. It doesn't mean you can't scalp at other times of the day. The Asian session, late Asian session is relatively liquid as well. It's just the overnight session before Tokyo's open. With just Australia, New Zealand open, some of the Chinese markets, Hong Kong not on board. The liquidity can be a bit tight then, so just be careful is all I'm saying. Not saying you don't do it, but understand what's going on and what's the nuances of the time. So they're the pros and cons of scalping. But what are the attributes of a good scalper? Perhaps more so than any other type of trading. With any type of trading, I say all the time, you need to understand yourself. So you have to have good emotional control, good emotional intelligence, or work on it. We're not all by default, we're all poor emotional intelligence. So you've got to understand yourself. Is this for you? If you think that I can deal with short-term trading, I'm happy to take a few pips, I'm happy to lose a few pips multiple times in a session, multiple times in a day. Can you deal with that up and down, that roller coaster of emotions? Lots of people can't. I also talk about handling pressure well. A lot of people say, "Oh, I like a bit of pressure in my life. I like a bit of stress. It's good." But can you do it on a continual and consistent basis, day after day, session after session? This is how you trade. You need to get your mindset ready before you open up trades. Can you cut losses quickly? Can you accept that you were wrong? If you're the sort of guy or girl trader that is continually moving their stop loss or doesn't trade with a stop loss, I would argue that scalping you because you can be, you can't change your you can't accept. The other thing is you've got to be able to make you have to deal with quite a strong cognitive load. All of it, you might have done all your planning and think, oh, this is good news. The news has just come out. This is going to be strong for the dollar. The dollar is going to continue up, and all of a sudden it doesn't. You've got to be able to flip your opinions quite quickly. And deal with long losing streaks, deal with long winning streaks. So, performing well under stress, handling pressure, continuing consistently, and then performing under it continually. They're the key things that make a good trader full stop. But certainly from a scalping point of view, these are again highlighted and become even more focused and exaggerated because of the nature of the short-term business of scalping. And you've got to be able to adapt quite quickly, as I said earlier. These are all, if you've got some of these, these are just 5 or 6 I've pulled up. If you've got some of these attributes, or you can work on these attributes with your personality, you'll have a good starting point for being successful as a short-term trader. Okay, so in summary, stick to one market, whether it's Forex, whether it's gold, try and trade in the direction of the higher time frame trend. You don't always have to do that. Don't try and do it for too long. But these last 2 points are absolutely key. Keep the risk small. So when you lose, only lose 1 or 2% of your account, absolutely maximum. And if you have 2 or 3 losing trades, you've lost, say, 6% of the day. Stop. Give it a break. What's gone wrong? And it's usually not the strategy, but you. Obviously, no strategy is 100% successful. You have losing trades, and you've just got to accept that. And that's where most people get wrong. They don't do that. They can't do that. So motions and risk, absolutely key. So quickly, I've got half an hour left. I'm not going to get through all 6 of these. I've got the VMA one as well. But we'll go through them as we see them. So Heikin Ashi candles, which we've got on our my trade locker platform still, because it's dropped out, but all sorts of issues with trade locker recently. But I have got Heikin Ashi candles on my VWAP setup here. So we just bring that in on the minute time frame, so we can see. I'm just looking at here. The Dow has opened really strongly with my Heikin Ashi candles. The last on the minute candles here, we've got a strong uptrend and a very, very strong start to the session. The last 4 minutes, we've got 4 big candles. So let's have a look at Heikin Ashi. So Heikin Ashi, developed by the Homer, who created the candlestick trading. Heikin Ashi in from Japanese to English means average bar, so HA. They're weighted candlesticks. They're not the same as traditional candlesticks. They use a different formula instead of the open, high, low, close, the OHLC. And the new candlestick, because it uses the average of the 2 previous candlesticks. So, yeah, here's the calculations for Heikin Ashi if you want them. Opening up in the midpoint of the previous bar, so it uses the value set, the high and the low, and then the average price of the current bar, not the actual price. So that's one of its drawbacks. But it's very clean and very simple. This happens to be the monthly example. So big strong downtrend, big strong uptrend, big strong downtrend here. This is back in 2019. That was the monthly. Here it is on the minute chart. Strong downtrend, so red for down, white for up. And again, simple way of using this is basically in and out when it switches from red to white. So here it'd been short, then it was out, then we got short again, and we moved down, and then we move up. Okay, so if I just bring in what's going on now exactly here as we speak on the Dow, on the opening trades, there you can see the volatility. This is the Dow. This happens to be the 50 period moving average. These are Heikin Ashi candles here. So green for up, red for down. So it's been strong trend above the 50 period. We had an opening trade here, so that's a positive one. And we'll come into the bodies of the candles and the wicks in a minute on Heikin Ashi. The wicks and the body candles are absolutely key. So strong uptrend, and then all of a sudden it's got out. So you've got some of that movement. You can see the spread and moving around as opening trades take place, but it's a positive start so far on the Dow there. So we'd have been long on that one. So there's with Heikin Ashi. So and that's comparing the same time frame, the 5-minute time frame with Heikin Ashi candles. See how clean they are compared to normal candlesticks. So there's multiple red candles on this. There's 4, isn't there? 1, 2, 3, 4 here. There's only 2 here. So this trend is very much set with the white bodied candles. Okay. So they look the same, but they're constructed differently. My setup there, they're green and red, or white and red. They happen to be white and red on that particular on this particular presentation. And the key thing is the wicks. So the strongest trends have no wick. Okay, so whether you're going up or down, it's good for trending Heikin Ashi candles. It's not good for for sideways markets. That's why using them as scalping can be a bit questionable but if you're strict and follow the red and the green change, or the white and the red change, or change on the wick and body candle size, they're as good as normal candles, if not better, because they're smooth and move. Okay. But the key thing is no wick. So for uptrends, if you've got a big body candle with no wick below or no shadow below the candle body, that's a strong uptrend, and vice versa for downtrends. So just go back to the previous slide where we saw um, the trend. So you can see here, these are positive. These three here, for instance, are very positive uptrend. A big bodied candle, no, very small wick to the north, south of the candle, very short shadow there for 15 minutes. The body of the candle reduced here after this 15-minute move up, but there's still no wick here. We're still white, but we've got a wick to this. So it might say, if you've bought here, you might want to be thinking about closing some of your position out, but it's still white, so stay in. We've got another doji candle here, wick to the north, wick to the south, and a smaller body that might have, those that were thinking about getting out here might have got out here, even though it's still white. Another doji candle, but it's a bigger body candle, so that's more positive. And then we get another positive, a very significant positive candle. It's the biggest of the body of the candle. We've still got a very small wick to the south, small wick to the south again, then big strong candle. So if you'd stayed in through here, which you should have done, you're all good to go. And you might have added as the body of the candles got bigger. Here we've gone from white to red. You could have got out at this point if you're just using the very simple long white, short red. But that's a relatively positive negative candle because there's no wick to the north here, you see. So that's suggesting perhaps this rally up might have not only come to an end, but it might have turned around. It's probably too early to go short because we've been long all this time. But that's a relatively positive candle to go short because it's got no wick to the south. The only problem with it is the body of the candle is very small, so you wouldn't have been perhaps taken in on just that one candle. What happens next? 5 minutes later, we got another big bodied candle. We got a big move up. We went all the way up here during that next 5 minutes and all the way down here, but the body of the candle is much bigger. We've turned white again, and then for the next 15 minutes gets even more positive than it was down here. So the trend is very much up and running, and then it turns red finally. And again, whether you would have got out at this point, 8:55, 8:55, bigger down red candle with normal candlesticks. As you can see, with normal candlesticks, you get much more of a suggestion that the trend is over. So there's one there that we didn't get a white one there. We'd get a red one there at 25. That's the same as that one. So that might have been, if you'd had a normal candlestick pattern next to you, you might have got out on that one. But this strategy here is still long as well because we're above the middle moving average. But anyway, we'll come to that in a minute. And there we go. So that's I say the beauty of Heiken Ashi and the beauty of the wick. The wick is absolutely key. The size and the body of the candle is also key. As I've written here, long body strength equals size matters, and doji candles means balancing the decision like they do with normal candles. So you get an idea of the trend running out. It's very, very good for trend following. It's not so good when we've got mean reverting, and therefore it can be a bit limited in scalping strategy. But if you follow it strictly, strict red and green, you can still make good money using the Heiken Ashi approach for scalping. Okay. One of the downsides is though the live price. What it can sometimes be because it's the average price, can be sometimes distant from the candle close. I'll show you that as an example in a minute. But the message of the candle is key. A strong trend has no upper wicks, so you want to be looking to be short. If you've got no upper wicks, you look to be short. No lower wicks, you're looking to be long, especially as we just shown there, if we've got a strong bodied candle. But let me just show this again. We'll just go back to the Dow here on the, remember this is scalping, so this is the 1 minute time frame. So you get attached to a hello. All right, what's happened there? Oops. I've moved the restream. There we are. Let's move my trade locker platform. So just give it a minute. So there's there that you can see the Dow here. So this is the Dow on the 1 minute time frame, guys, and so this is, I mean, this is again. So again, you use this happens to have a moving average on it as well, so you can see it's biased to the 1 minute. But if you just ignore the 50 period moving average for a minute, you can see the strength of the candle. So so very strong trend here. See, there's no wicks to the south here, so it's gone up, gone up, gone up, gone up, up. Then we've got the doji candles for 3 or 4 minutes here at 2 o'clock. We got to the 2 o'clock candle, or just after 2 o'clock candle. That's our high, and then we got a red, so we'd have gone out there. Potentially short. Not necessarily long again, because we're sideways. See, the price action has gone sideways. Would have gone short there certainly, because it's a similar candle to the first one there at 1406. So short. Perhaps see if we're going to go down to the 50 period. We didn't, and again out there. So short for that one. Possibly long there, and then out short there again, and out. Sort of so short there. And there's the actual open. Remember, this is the Dow, so we obviously have much volatility on the actual open. So what can we read into this? Well, the 50 period moving average also held throughout all of this pre-market session. I mean, the same story goes. If we, where were we? So this high we got to here was the pre-market high, wasn't it? Of the cash session. Remember, this is the minute time frame. Go back to the beginning of the days all the way back here. Beginning of the day, it's all the way back here. So that's our low for the day. We'd have put that on as we do as if you're going to trade the open. So that was our low of the day there. That's our pre-market high of the day was there. We'd mark that on as well if we're going to trade the open here. So that's interestingly. And then what happened? There was the opening trades, and a minute into the open, we were above our pre-market. So that was something quite positive. So nice and long, and then all of a sudden a red one. So we got out here on the red, and it could have either added to the short position immediately on the big bodied candle again. No wicks this time. See how it chops around really quickly. See, it's a really good example here of the power of Heikin Ashi candles. Very positive open for 1, 2, 3, 4 minutes. That's all it took. It was only lasted for 4 minutes. And now since then, it's been quite negative. We're moving down. But look, what's happening? We've got out here. Oh, sorry. You could have got out here as it's gone to the 50 period moving average if you were using this as a target. Otherwise, you're still short because we're still red. We've had a bit of indecision, as you expect in these short time frames, but we're still short here. So you can see we moved down. Our stop loss would have been there initially. My stop loss would be here now. I might have pulled it down to the top of that that wick there. So I might have taken some profit on that if I was using this with the 50 period moving average, because we hit it, but that's a big body candle, isn't it? Bit of indecision, a red candle, and it looks like I might be getting out now because this is flipped, or looked like it was flipping to green, and it hasn't. But what's it showing me at the moment is that it's, the 50 period moving average is holding. We've tested it once, twice, 3, 4 times, last 5 minutes, and we're now pushing under it. So I'm happy to stay short and to say stop loss would be there. So we've made money in that first 4 minutes, and now we've made money since we went from red to green. We'd have got in here, but you can see the spread again. Remember, guys, telling you how it is. The spread is quite high here, so you're not going to get in on the candle prices. But you can see here, there we are. We're moving shorter again. So moving to the downside now. We're 7 minutes into the open, and we're moving lower. And we're still short. So if can't remember. Oh, that's my is that my stop loss? Oh, can't remember what that. Oh, it's my entry. I think it's my entry from the daily time frame, isn't it? I think. I don't know why that. Actually, I was from the short. I don't know. It's my stop loss from the day, miles away. So let's just go back to the minute with the Heikin Ashi candle. So that's Heikin Ashi using a simple strategy to just change, get in and out of your position on the change of the color of the candle, whether you're using red and green or blue and white or white and red, red and white as I was in the other. Not No position is perfect, but it does work on other time frames as well. This is just comparing 5 minute as the 1 minute, 5 minute, and 15 minute. If you got um, multiple time frames on your board, that's ways of doing it like that. There's the um, other time frames. So it's that's what the reason I like Heikinashi candles, and many fans of Heikinashi candles, even for scalping, is the clarity of what's going on. So there we are. That's the 15 minute. There we got the 15 minute, 5 minute, and 1 minute time frames side by side. You see the trend is still very much up here on the 15 minute, and the 1 minute still moving up and moved up even higher. So do it that way around as well. So as I say, the ways to trade it. Just simply in and out, no wick to enter. You just go white when it's all positive and red when it's short. You want to keep it simple. You want to be a bit more, a bit more nuanced about it. Add another indicator like I had there. That 50-minute moving average could be a shorter moving average, could be something else on your Heikinashi charts. But also you could have a normal candlestick pattern next to it, so it might encourage you. It might suggest more going on, perhaps more quickly than the Heikinashi, because remember the Heikinashi is waiting for the two candles to complete to give you an average, but it keeps you in a strong trend like we've just seen on the opening trades and that move at 2 o'clock on the Dow. And now we're still red. If you can see my chart here on the minute, the Dow, the Dow. So there we are. We're moving. We're continuing to move lower. So the pre-market high was taken out, but then it was rejected. So we went through it on open, the pre-market high, created a new market high. Just move that up there. So that's the high of the day so far, 46,875, just about. You can see that's the high of the day. But since then, we've gone short. We went to the 50 and we've burst through it. This is significant because we hadn't burst through it since 1 o'clock. And when we did burst through it before here at around about lunchtime, the low here, if you like, of the European session, it just looks like it's about to get tested, isn't it? See these lows here, these 1, 2, 3 lows here at 46,680 seems to be where the next level would be. So that could have been you could have marked that on earlier, obviously. So that could be your next down target for this strong trend. But at the moment, what's the Heikinashi candles telling us? Well, the Heikinashi candles telling us is that the downtrend is gaining momentum. How do we know that? How can we interpret that? Well, because the body of the candle has got bigger from the breach of the 50 period moving average, the flat running 50 moving average. And there's certainly, we've had 1, 2, 3, 4, 5 candles, or 4 completed candles last 4 minutes with no wick to the north. This is quite a significant move down. We'll see what happens if and when we actually get to this 4680 area, this low area we'd found support earlier in the day. And again, you might be buyers there, so you might want to reverse and buy there. But rules. We haven't changed green. We might see a green candle at this point, but we are under the 50 period moving average. We're probably under the 20 period moving average now as well, and it's continuing to move low. So again, a big fan of Heikinashi candles, guys. If you accept their weakness about its average price, and it can be a long way from the actual price when the candle pattern's forming. It's you apply it successfully, you can it's a very successful, or can be a very successful approach. Next one, where are we? I'm going to finish with this one, okay? So we'll do the other 4 another day. So this is one of my oldest and most favorite default strategies: the 5, the 9, and the 21 exponential moving averages. It's not actually on my platform at the moment, but this has got the Bollinger Band on it as well. Simply because the midline of the Bollinger Band looks a bit messy, this, doesn't it? Is the 20 period, and it's a trend. Again, it's a trend following strategy that works for me across all platforms. Of all the strategies, this is probably my go-to one. um, um, the 5, the 9, and the 20. If you're going to use, if you want to use Bollinger Bands as well and get the benefit of the Bollinger Band, or the 21 EMA. Let me just show you that as well. Unfortunately, that might um, 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 layout is the trade lock. I lost all my layout, so the only one I've got on here is the Bollinger Band and stochastic. Is that on the? I'm sure this is on that. Right. Let's tell you what. Let's do this one. Let's do number 4, Bollinger Bands and stochastics. Okay. Because that's the one that I've got the strategy for. We'll do the crossing one later. Okay, so this is more appropriate. So one of my strategies is the one that's the other layout that's um, on the trade locker at the moment, and it is designed for mean reverting strategy. The Heiken-Ashi candles tend to be better for trends, and particularly strong trends that we just saw there on the Dow. So we're just going to use the standard settings for the Bollinger Bands, and I'm going to use I tweak the stochastic settings here. So these are my settings. Default 20. Sometimes I change it to from 20 to 2 to 20 to 2.5, just to make the reverting a bit more of a stretch to the upside. But default settings on the Bollinger Bands at 2 and 20, and then stochastics, the K line and the D line, I set at 10 and 6. So I say here on this example, I'm using standard deviation at 2.5. You can leave it at 2 point. It doesn't make that much of a difference, to be honest. So these are the two very, very simple, very popular indicators. Bollinger Band's been John Bollinger's been around since the 80s. Stochastics Lane have been around since the 70s as well. So well established technical analysis indicators that still work. I know it gets lots of criticism from some price action traders, from volume traders, but these still work, my friends. So if you can master these, they're very straightforward. And that's what we're looking for. We're looking for these two indicators to cross. So if we're going to go long, we need a candle. So the Bollinger Band is the first one we're looking for. So the Bollinger Band candle, the candle on the Bollinger Band needs to cross the outer Bollinger Band. So if we're going to go long, the candle needs to close below the lower Bollinger Band. That's what we're looking for. To take the position, though, we need the stochastic, the K and the D line, to cross from below to above. So the K line crosses from below to above the D line. We take 80% of this is a standard setting for the strategy. We take 80% of the target of the system at the midline of the Bollinger Band, and leave 20% on to see if it's going to go to the other side of the Bollinger Band, to the upper Bollinger Band. We set our stop loss below the lowest low of the entry candle or the previous candle. Okay, so let me just show you what that looks like. So that's a standard setting. 5 minutes, 10 minutes, whatever you want to, as a scalper, you can do that. Now then, I've lost my, where's my strategies? I'd say it's because it's still there. Right, so this is the Bollinger Band set. Just ignore the ATR that's also on there. Let's get rid of the ATR so it's not confusing people. So that's right. So this is the Dow. This happens to be on the 4 hour. Let's just go back to the 5 minute and see how this would have performed for us. Okay, so what we are looking for is, as I say, we're looking for the first trigger for this strategy is a touch of the outside of the Bollinger Band, whether it's long or it's short. So for instance, the last that touch there, and then that was looking to go short at that point, and it went down, but it didn't go down, and it's not worked out, that one. Okay, so then it's touched on the outside. We're still looking to go short here on the cross of the, so that would have been short there. You can see it's been touched here, and the last cross of the K and the D line, remember this is 10, 6 and 3 for the stochastics, was there. It's crossed properly there, so that would have been a entry point there. So that would have been an entry point. So it would have been short there, because the blue, see the blue's crossed from below the orange. It's then crossed back up again as it's gone back up. Our stop loss would have been up here initially, as we said, or perhaps probably above that wick there. Well, if we got in long there, stop loss would have been there at this point. Remember, these are 5-minute trades, so we'd have got in here. Stop loss. Well, we got in there. Stop loss nice and tight on that cross. Then it moves. So our target is this midline. So that's 80%. So we'd have got in here, and our target is here. So that's 80% off there. See how the stochastic moves down really aggressively. Looks like we were going to get to the same, and it didn't. So we'd have got to target, pulled our stop loss down to entry, and then it would have reversed and moved back up. Okay, so we've won 80% of our trade has been successful, 20% has been stopped out at entry. Okay, so that's finished. Let's just get rid of them. Okay, so we can move this. So the next touch of the outer of the Bollinger Band is there, isn't it? So that's the next outer touch. We are now looking. So that's the first signal. We are now looking for the stochastics to cross again, this time to the downside. So the blue to cross from above to below the orange line, which happens at that target. Okay, and obviously this is running into open. So the risk of taking this at like 5 minutes, it would have been there. We'd have got filled there. So that's the touch. They've crossed there, but you can see here the Bollinger Band cross doesn't take place on that. It takes place there. So we'd have got this time. We'd have got in very, very simple strategy. Short, and what happens? Well, again, our stop loss would have been. It's not. It's been stopped out. But the question I would ask you: we want to take that so close to the volatility of the open, and I would say no. Would be that. So what happens on open? So for the first 5 minutes we go long, just like we saw on the Aikanashi candles. So we allot this a big strong long candle, but remember what we're doing, we're looking to go short. So we've touched the outside of the Bollinger Band again. Next one is the reverse of that. So you could have either entered short there because the stochastics are starting to move down. They're moving down now out of the overbought situation. If you feel that was too risky because we're only 5 minutes in, you could have waited to the next one, certainly, and we're starting to move down now. We've clearly rejected that upper move, so you would have got in next entry, the entry we got in before. So we were going short from here, and we've gone short again here, and this time our stop loss would have been up there to start off with, or the top of the Bollinger Band. There to start off with. As it's moved down, we'd have moved down to the Bollinger Band. We'd have moved it down to entry here because we've got we got to the target here. So if we got in there, we'd been a bit aggressive, but we certainly would have got in there. We'd have got that target there. So we'd have gotten it at 46792, got out at 46757. So 15, 20 points to take the spread off. See how tight the spread is here on the Dow. And then 80% of our target is still, 20% of our target is still open. Our stop loss is there at, I wonder what that one was. That was our first one, wasn't it? So that's working out quite nice as well. And there we go, bang. We've closed our position because we've hit the outside of the Bollinger Band. However, what you could do, because we've got this widening, we had this tightness in the Bollinger Bands on the open, it's suggesting there may be some volatile moves to come. So as we saw with the Heikin-Ashi candles, we'll go back to the Heikin-Ashi candle in a minute. We see, again, these are normal candlesticks are moving to the downside. If we flip these, some people ask me about if we put Heikin-Ashi candles on here, which we could do, see if that makes it clearer. Well, it does, doesn't it? You know, it's clearly short, but the rules are still the same, aren't they? We've touched the outside. We've had the cross there of the Heikin-Ashi there, and it stopped us out. Didn't work because of the open. But certainly, that's a big. And then again, see, using the Heikin-Ashi candles, you wouldn't have actually got in until the close of this candle, and you would have got filled in somewhere down here. See what I'm saying about the candle? You get filled there, so you would little to move, but this is still moving down on both the Heiken Ashi setup and the normal candlestick setup with this. Let's go back to normal candlesticks for this one. So again, so target one's been hit, target two's also been hit, although the candle hasn't closed outside, so we're not looking to go long yet. Remember what the rules are, it's the body of the candle needs to close through the Bollinger Band. So, but that's enough to take off profit, certainly when you're scalping. So a successful, an unsuccessful long trade ahead of the open, but certainly a very successful, more than compensated for the loss on that last trade to the downside here on the open for the Dow. So I'm going to wrap this up now, guys, because they're the two strategies I want to explain to you. And there's 4 more sat there. If you want more details on the other strategies, I'll do a part 2 with less of an introduction next time. So, as I say, guys, I hope that was useful, and you can apply this to your strategies. And as I said at the beginning, it's not the strategies, because I say all of my strategies work well enough. It's the how you apply them, you personally. That's the key thing. Okay, so that's the long position. There's the short position. Same thing. It's the other way around, going long above the. Sorry, this short. So we need to close above the Bollinger Band. That's what we've just been doing it now, hasn't we? Okay. So it's great for intraday trading. It also works really well on other time frames and other assets. Don't just have to be forex or Dow or indicators. So indexes we saw there. It's a mean reverting strategy. So if we've got a strong trending market, like we have with the Dow, ironically, be careful, going short. But on the short term time frame, in fact, the hourly, the 4 hourly is very strong to the upside still. You just be careful about not being too aggressive with the short term time frame. So as we said, it's a mean reverting strategy, the Bollinger Band setup. There we are. So this is the 5 minute. Remember what we said about the longer term time frame. The daily is very much in an uptrend. We had a down day yesterday. The 4 hour remains relatively positive. Interesting, we had a quite significant down. So we are sort of down for the day. We're in the under half of the Bollinger Band, or we were into open. And then the hourly will also have rolled over this morning, moved up higher into the open, as we said before, but it's still relatively positive because it's above the 20-hour moving average, which is there at 46,600, 650. So if we look at our 5 minute time frame, 46,600, 650. Was it 650 or 600? 46,650. So interesting. That's the middle of the Bollinger Band on the hourly time frame. So again, that may be another reason perhaps to be getting out of this short term trade. So 650. Oh, it's a long way down here, isn't it, on the 5 minute time frame? So 650 is there's our it's 50, wasn't it? Not 6,500. There we are. 46,550, I should say. So there's the 20-hour moving average. So that might be a hence why we want to be looking to get out on the break of this candle, perhaps turn long again, because that's the big support area. Remember, the high time frames are long, but doesn't matter. We're scalping. We're in and out. We're out. We're finished. That's the beauty, as I said, of the scalping. Don't have to get attached to this position much. So there's our Bollinger Band and stochastic scalping strategy, and our Heiken Ashi striking strategy. There's lots of others. There's 4 others. They've got the MMA and the TAMA, the one we skipped through, my pivot point one, the bounce and the break of the pivot points, and my longest term strategy, the crossing exponential moving average strategy, using the 5, the 9, and the 21, or the 20 if you're going to use Bollinger Bands with it as well. So 5, 9, 21 EMA, and the other one is our VWAP. There's the triple exponential moving average and the adaptive moving average, nice trending strategy as well again, and the VWAP, the volume weighted average price. We'll do that next time. Okay, so I hope that was useful, my friends. As I said, the success in trading is really always about you as a trader. And we've looked at what scalper is, some definitions, some ideas about getting started, the pros and cons, what makes a good strategy, scalping, um, personality, and then lots of different assets. We've only had time to run through two of them, but strategies, sorry, strategies, not assets. But there's, as I say, it's really about you as a trader. So I hope that was useful. Some of my books. Any further information, get to theproptrade.com. If you're not with us, come and join us. As it says on the bottom of the presentation, there we have 25% discount, 15% for if you've had an account before and you've like to open another account. Thousands of dollars and cryptos and whatever they want to be paid in at the end of every Friday. Just check out our Discord group for that. Do get on Discord. It's where I say it's where I put my end of day trades and other ideas about trading. They're here. This is what I do, and I'm still doing it. And I update, all the pros and cons. Both. It's not just winning trades; it's losing trades. I update every week about how we've done. We've had a really good. We had a losing week a couple of weeks ago, I think, and that's only the 7th one this year. So, overall, we're very much in the money, and you can do that too, my friends. Whether you're scalping, whether you're trading 4 hours, 1 hour's, swing trader, it's up to you. Find what works for you. Okay, I'll leave it there. I'll see you tomorrow. It's the FOMC minutes tomorrow night. I'm traveling tomorrow, so I won't be around during the day, but I will be there for you for the minutes from the Fed. See what Mr. Mirren had to say. Lots of chatter today, actually. If you're looking at moving the market, we just look at the calendar. There's not much data, but there's plenty of central bankers with plenty to say later on today. So Michelle Bowman is speaking shortly. Remember, she was a big joined Mr. Mirren as a big bear. Neil Kashkari, head of the German central bank, also speaking. Miss Lagarde also speaking later on today. I thought it was more members of the Fed. I'm sure there is. But anyway, check that out. So not a lot of data to move the markets today. Nice positive PMI there out of Canada. It's a really positive number there. Suddenly, that's a bit of a shock, to be honest. But yeah, Canada's been under a bit of pressure, but that's a very positive PMI from the IB Institute out of Germany. Out of Canada, I've just noticed. Anyway, we'll see you all tomorrow for the FOMC. Take care, stay safe. Any questions, stick it on Discord and let me know. I'm here to help, my friends. All the best. Take care. See you soon.